This is going to be all about value stocks. Hopefully you saw my first video on growth stocks, but if you're looking to get into some value stocks for the long term, you sit right there. Hey everybody, Glenn Tompkins, Senior Instructor here at VectorVest. Always my pleasure to give these videos to you. So this is part 2 where we're going to look at value stocks. As I mentioned before, we already covered growth stocks. What is a value stock? Well, a value stock is something that someone feels is worth value. And that's something that Warren Buffett does a lot of in his portfolio. He looks for stocks that are going to be valuable later on in time. But what makes it catch his attention now? Well, these stocks are under their current value. So VectorVest has a value for every stock. And as a matter of fact, let's get right into the stocks that we're going to take a look at today. So no news articles today. These are stocks that you already should know about. These are great value plays. The stocks that we'll cover today are Lowe's, United Health Group, BlackRock, and Sherwin-Williams. My Sherwin-Williams, all about the painting. So these are great stocks for you to consider, and I'm going to tell you why these are good value stocks. Now, the first thing about looking at undervalued stocks or stocks that are currently undervalued, people tend to look at low PE ratios to see if a stock is undervalued or not. But PE ratios, if I ask 10 different people about a single PE, some people will say, well, no, that's not undervalued enough, or that's too undervalued, or that's really not undervalued. It is very subjective. So in VectorVest, we assign an intrinsic value on every stock in our database, and that's what you'll see right here. Notice that Lowe's is trading at a price of $192 with a value of $306. Based on things like earnings and earnings growth rate, we can assign a value, an intrinsic value on every stock. Now, there's a little bit more cooking in the sauce because it's proprietary to come up with what a value is on a stock. But you'll notice Lowe's, 192, value 306, undervalued. United Health Group, trading at 374 with a value of 504, undervalued. BlackRock, trading at $760 with a value of 921, undervalued. Sherwin-Williams, trading at 744 with a value of 794, undervalued. Now you look at these and go, holy smokes, these stocks are way off the chart, too expensive for me. Notice that every one of these stocks trade in the N exchange or the New York Stock Exchange, and they all have little X's in front of them. All of these stocks are optionable. So if you want to be able to control the same amount of shares that you could if you had that kind of money, and you want your money to be leveraged, think about trading options. You can get into these good value stocks at a lot less money based on the price that you see here. All right, let's move over to our indicators. Specifically for undervalued stocks, I'm going to concentrate on relative safety. Relative safety is an indicator of risk. Relative safety looks at the consistency and predictability of a company's financial performance. In layman's terms, do these companies meet or exceed their earnings expectations quarter over quarter, year over year? See, companies that do that consistently are more attractive to investors. Why? Because earnings is the engine that drives a stock's price higher. As long as a company can continue to meet or exceed its earnings expectations, these are companies that consistently go up. Well, remember, as a value play, I want a stock to go from here and in time end up over here. So that is the importance behind looking at undervalued or value plays. Now, notice that these stocks are sorted, so the stocks that have the highest or the best value for relative safety is the top of the list, sorted all the way down. These are very safe stocks, and again, they're undervalued. Now, remember in the growth video, what was the biggest thing we looked at? Relative value. We wanted to see the stock's potential to outpace a AAA corporate bond over the next 1 to 3 years. Well, how about you're getting a double here? Not only, actually a triple, because not only these stocks undervalued, they are safe, less risky, and all of these stocks are presumed to outpace a AAA corporate bond over the next 1 to 3 years. Not only that, here's the home run part. All of these stocks are in uptrends. Relative timing tells me that these stocks are right now moving higher. Above the value of 1, the faster in an uptrend they are. The slowest one right here is BlackRock, but still with a relative timing above the value of 1. Now let's step this up a little bit more. We hit a home run with all of this. We got the undervalued, outpacing the AAA corporate bond, there's your double. Safe stock, there's your triple. RT above 1, there's your home run. Now, all of these stocks have good combinations of relative value, safety, and timing by our master indicator VST. All of these stocks are less susceptible to big pullbacks in price. It just keeps getting better. All of them are buy recommendations. Now, in our growth video, we wanted to see stocks that had the potential of an earnings growth potential way higher than what these are. These stocks all still grow their earnings at a double-digit clip, but not as high as the growth stocks. Not only that, look at the earnings per share. All of these stocks make money. They're in the positive and they grow their earnings by a clip of double digits. But wait, there's more. When I'm looking at value stocks, I'm looking for stocks that are going to go up over the long term. How about another way to still make money on these stocks? How about each and every one of these stocks pays a dividend? So I can make money on the stock going up by capital appreciation. I can now play the dividend on the stock and make money that way. And then because these are all optional, I can actually trade options. I can make money 3 different ways on each and every one of these stocks. Now with VectorVest, you can see what the dividend yields are. And you know what's important about this? I can see what the dividend yields are, but I want to make sure that the company's earnings can outpace what the dividend yield is. Dividend yield on Lowe's is 1.25%, earnings yield 4.92. This company can cover the dividend. On United, it's 1.34 with an earnings yield of 4.93. It can cover the dividends. 2.17 dividend yield on BlackRock with an earnings yield of 4.71. It can cover the dividend. And the last one, Sherwin-Williams, dividend yield of 0.89 with an earnings yield of 3.6. Definitely can cover the dividend. Now, there's something that's you will only find in the VectorVest software is a dividend safety. Cast on a scale between 0 and 99. This tells me how safe this dividend is. So dividend safety, way high in numbers. The lowest one is BlackRock at 87, but any value above the value of 50 is good. It's a safe dividend, but the earnings yield told me that prior to looking at the dividend safety. All right, so now that's everything you need to know. These are great value stocks that are undervalued, that have the potential to continue to grow higher. You can make money on the capital appreciation, on the dividend paid out, and on the options trading, maybe selling a covered call and doing that over and over. These are great plays. Now, I want to do something else. Let me move all the way over to the right. These are also kind of nicely diversified. Lowe's is in retail. United Health Group is in healthcare. BlackRock is in financial, and Sherwin-Williams is in building. I like that all 4 sectors are different, so you're spreading out your value plays amongst the market as a whole. So let's go take a look at these graphs. Before we take a look at the graphs, folks, I want to invite you to our YouTube page. It's more than just 1 or 2 videos. We've got a plethora of videos at your fingertips to help you make better decisions in the market and to make you a better investor in the market nonetheless. Don't forget to comment, like, and subscribe to our channel. And if you like the content, please make sure you share it amongst your social circle. All right, everybody, we're here at the graphs for these stocks. Wow, first stock you look at, Lowe's. Bottom left, top right, over the last year. On my graph, I'm looking at a 50-day exponential moving average. Down below, here's our relative values. I'm actually going to take that off. I do want to look at earnings per share. I do want to look at earnings growth rate. And I do want to look at relative safety. I'm going to take off the CI. And I'm going to make my relative safety into an area. Look at that. Nice, safe stocks, undervalued stocks. Gotta love what that stock looks like. Look at that. Bottom left, top right, a little bit more choppy. Look at the relative safety up there. Watch the earnings growth rate. It's starting to fall, but earnings per share is still rising. Let's go to the next one. Wow. Bottom left, top right. This looks good all the way around. Rising earnings per share, rising earnings growth, rising relative safety. And the last stock, again, Sherwin-Williams, a little bit more choppy, but still bottom left, top right, pulling back right now. So let's talk a little bit about when to get into these stocks if you're not already in them. You can always wait for the stock to go up or moving higher before you pull the trigger. Always do that. Make sure it's above that moving average and make sure that all of your indicators are still good to go. Now remember, we only looked at 4 stocks. If you're interested in looking to see if any of the stocks that you're currently trading are value stocks, let's go back out to my website here and let's create a new web page for you. Always think about this. Go to www.vectorvest.com/free and you can type in your stock that you feel is a value stock, enter the symbol. Let's say you think it's Apple, AAPL. All right, it'll send an email to me. I can get the report. And very quickly in my email, it's going to pop up for me. Now we're at the stock analysis report. It shows you what the stock's price is doing today, what it looks like over the last 3 months, and what's going on in the industry. It shows you what the recommendation is. It's a hold. Look at that value. Price is at 119, current value at 123. That's a value play. It is undervalued, fairly going up in price. It's a good safe stock. Also checks the box for being a value play. And if you want to get more information about some of the things that we track as well, click here to learn more about these ratings. But look at that upside potential is there as well. That's a great way to find out if the stock that you're looking for is a value play. So with that, folks, I want to say thank you for joining me for part 2 of my 2-part series looking at growth stocks and value stocks. If these are stocks that you do not own, at least think about them or utilize the free stock analysis to see if your stocks fit the mold of being either a growth stock or a value stock. With that, folks, this video is over. Until the next time, see ya. Yeah.